This is a troublesome situation for Tesla stock as it failed in breaking its resistances and could not resume the bull trend. Now we see many signs of weakness. However, Tesla has yet to trigger a clear bearish reversal structure, and despite the signs of weakness, it is still above many key support levels, and in order for Tesla to reverse this bullish sentiment, it must break these support levels first. This is quite dangerous. Tesla is trading in a no man's land between key support and resistance levels. Therefore, we must prepare ourselves for what's next. Tesla is not the kind of stock that remains still for too long, so let's start our technical analysis on Tesla stock and work on some strategies we can use. Welcome to the Finance Hydra channel. My name is Nathan. Let's start our TA over here looking at the hourly chart. In the 1 hour chart, short-term speaking, it is quite frustrating because in the first hour this morning, Tesla did break yesterday's high. However, we couldn't close above yesterday's high, and we did a fantastic shooting star candlestick pattern closing under the 21 exponential moving average, indicating that no, the momentum is not bullish yet. Could it turn bullish again? Well, yes, of course it could. However, we gotta break the previous resistance area first, which is around the 209 over here. If we take a closer look at the daily chart, well, Tesla is clearly correcting. We are dropping 3.63% right now. But to be fair, who isn't, right? Who isn't? Take a look at this heat map over here. Nearly everybody else is dropping. So Tesla is just following the sentiment. It is just following the broad market's sentiment, the momentum. However, despite this correction today, Tesla is just moving sideways for the last couple of weeks since February 8th, right? We are just moving sideways below the 214 area over here. This is a classic time correction, which is different than a price correction. A price correction occurs when the price actually drops to lower levels to hit its technical support levels. On Tesla's case over here, it is a time correction. The price is just moving sideways while the 21 exponential moving average keeps going up, and eventually it is going to catch up with the price and it is going to work as a support level for us. So this seems to be just a sideways correction, a time correction, while Tesla is just gathering strength. It is just trying to cooking something over here in this area before the next explosion. Will the next explosion be upwards? I don't know. I don't need to know in order to trade well. And before we continue, if you want to trade with me, check my website, join the top 5% family that can actually make money while beating this market. Public track record, my dear friends, public track record. Now, regarding Tesla, well, it is a very complicated situation because we are in a no man's land. As long as Tesla remains below the 214, no bullish rally, no next bullish explosion on Tesla is going to materialize. We gotta break 214. That's the most important resistance level you should pay attention. Let's say you are bullish, okay? You believe Tesla is going to resume the bullish rally, it is going to resume the bullish sentiment. This is the key point for you, 214. That's the resistance level Tesla has to break. Oh, what if we break this 214, Nathan? Well, the next technical resistance is 237. Maybe we're gonna break the 237, maybe not, I don't know. I just know that this is the next resistance level on Tesla. Now, if you are bearish, you believe that Tesla has to drop, it has to correct to sharper levels. In that case, in order for Tesla to materialize a crystal clear bearish structure, it gotta lose the 180s area down here, because this entire area is a crystal clear support level for us, and there is a quite strong support level as well. Let me move it to backwards over here, because the 180s, the 182 was a previous resistance level on Tesla from December 2022. It did work as a resistance level on Tesla this year again as well. It might work as a support level in the future. In addition, we have the 21 exponential moving average over here, which is going up, by the way. That's another support level on Tesla, and this area over here is the trigger point of a possible double top chart pattern on Tesla, because we hit the 214, we failed miserably, and then we hit it again. If we fail miserably and if we lose this triple support level, I think we're gonna officially trigger a double top chart pattern, indicating that Tesla is going to correct to lower levels. Maybe it's going to even resume the bearish sentiment over here. Right now, Tesla is still above this triple support level. In fact, we're not even close to this triple support level. So since Tesla is bullish in the daily chart, any pullback to this area is totally expected and would be even plausible and would be even good, even if you are bullish on Tesla, as crazy as this sounds, because a pullback would be just another opportunity to buy at a cheaper price level with a better risk-reward ratio, and would give the opportunity to new people to enter on Tesla. Those who miss it buying Tesla over here, maybe they just don't have any cash, maybe they were just waiting for a better opportunity, maybe they were just too afraid. A pullback to this level would have a very nice risk-reward ratio, good enough to attract all of these investors over here in this area. So a pullback would be quite good. However, Tesla would have to react above this triple support level. If it doesn't, it is going to materialize a sharper correction. If we take a look at the weekly chart over here, in the weekly chart, the timing for a correction could not be better because Tesla just hit the 50% Fibonacci's retracement over here. Now, coincidence or not, the 38.2% Fibonacci's retracement is also around the 180s area, 184, 183. So this is another evidence that Tesla could correct all the way down to the 180s area over here again. However, it must find a support level in this area. Now, Nathan, what if Tesla remains extremely bullish? What if Tesla just breaks the 214 over here without correcting? Well, then Tesla will just be another buy again. And again, coincidence or not, the 50% retracement over here, which is working as a resistance level on Tesla for us, is around 210, which is quite close to our dear 214 resistance level in the daily chart. So see, right now Tesla is inside a trap zone. As long as it stays between these support and resistance levels, nothing meaningful, nothing important is going to happen. In fact, Tesla could spend one entire month correcting over here, because this is what Tesla did in the past. See, this is the second piercing line candlestick pattern we see above a support level. The last one was in 2019 over here. We did this piercing line, we triggered this piercing line. In the following month, we did a positive month. We went up more than 8%. And then in the following month, we crashed minus 6% because Tesla was doing a correction. Afterwards, it went up nicely. It did a similar pattern over here as well, right? It did a bullish engulfing. We triggered the engulfing. We went up nearly 18% and then we corrected. We lost minus 0.77% just to resume the bullish bias again. So as far as I know, Tesla could spend the next entire month correcting before it could materialize the next bullish leg. So guys, patience is the key over here. Right now, let's wait for what Tesla is going to do next. Let's wait for a better, clearer reaction to materialize. And of course, if you are still watching this video and you are not my subscriber, come on, it is about time for you to subscribe this channel. Click on the like button to support me, to keep in touch with my daily analysis, my daily insights on Tesla stock. I appreciate your audience, my dear friends. I see you guys tomorrow. Stay safe. Bye bye.